The Cuyahoga County Finance and Budgeting Committee meeting for Monday, August 2nd, 2021 will please come to order, and the clerk would please call the roll.
Calling the roll, Mr. Miller,
Here.
Mr. Tuma,
Here.
Mr. Jones,
Here.
Mr. Gallagher,
Here.
Mr. Shrine. Mr. Shrine's absent at the moment. Ms. Brown,
Here.
Ms. Baker.
Here.
We have a quorum.
Thank you very much. And the next item is number 3, public comment. Has anybody signed in for public comment?
No, Mr. Chair, no one submitted any public comment.
Thank you very much. We'll move on to item 4, which is approval of the minutes from the July 19th, 2021 meeting. Do we have a motion relative to those minutes?
So moved, Brown.
Second, Tuma.
Been moved and seconded to approve the minutes from July 19th. Any discussion? Hearing none. All those in favor say aye.
Aye.
Any opposed say no. The ayes have it, and the minutes from the July 19th, 2021 meeting are approved. Item number 5, matters referred to the committee are none. So we'll move on to our discussion item. And before we start the discussion item, I would just like to share with the committee an update on the ERP that unfortunately our lead person on WFM Workforce Management has resigned, and this creates a hole in our resources, and it puts pressure on our ability to do the January 2022 launch of the payroll WFM. However, no decision has been made to change the schedule, and the IT leadership is actively working on finding ways to fill this gap. And so I will monitor this closely and keep my colleagues informed as we go along. I'll be in touch with them throughout the recess. And so hopefully we can find a workaround on this and be able to stay on schedule, but it is a significant challenge. So we'll move on to the presentation, and our discussion today is about sustainability of the county's operations. As we know, because of the benefits of the federal assistance, we currently have healthy reserves, specifically in the general fund. However, even having healthy reserves does not guarantee financial stability if the operations are not sustainable. If we have unsustainable operations with the regular excesses of expenditures over revenues, well, then over time the reserves will be depleted. So it's important to look at the sustainability of our operations, and as a regular practice, the Office of Budget and Management provides projections on a 5-year looking forward basis, so that gives us some indications of where we're heading. Today's discussion provides an update. The second quarter report has not yet been completed. However, Director Parfiowitz has been able to update various aspects that relate to the long-term sustainability of our operations, and I would just express my gratitude for his willingness to share preliminary information ahead of the completion of the full second quarter report. We really appreciate the cooperation on that. So at this point, I would like to call forward the director to present the update on the sustainability of our operations.
Good afternoon. Okay, thank you for the opportunity to present the 5-year projections for the general fund and the Health and Human Service Levy Funds. As Council Chair Miller stated, I just want to preface the conversation by saying that the second quarter review is not complete and these numbers are subject to change. We're just now meeting with the departments to review expenditure projections for the remainder of the year at the request of Councilman Miller. We revised our 5-year projections to reflect updated revenues and some subsidies included in the first quarter report and prepared a preliminary second quarter report in this presentation. So today we'll discuss projections for the general fund, the Health and Human Service Levy Fund. For the general fund, the projections will include second quarter adjustments to revenue and subsidies, but not to expenditures. The projected deficit decreases substantially, and we do meet the required cash reserves each year. For the levy, the projections will include second quarter adjustments to revenue and subsidies. While the adjustments to the levy revenue are not significant, subsidy spending is projected to increase, but the cash reserve requirement will still be maintained. None of these projections include CARES or American Rescue Plan funds. For each fund, this is going to be sort of my format. I'll display first quarter projections as you saw previously, followed by a second quarter preliminary look. And then I have a third slide for each fund that basically nets the first quarter and the second quarter and squeezes out the differences. It will basically show the variations, and I will talk about all the variations from quarter to quarter.
Okay, I'm going to break in for just a couple of notes. First of all, if anyone prefers to follow on a hard copy rather than the screen, we pass those out so everybody has them on your desk. And so what we're going to do is we're going to hear the presentation of all 3 slides on the general fund, and then I'll ask for questions on the general fund, and then we're going to hear the slides on the HHS levy, and then I'll ask for questions on the HHS levy, and that'll take care of it. Thank you.
Okay, this is slide number 3. So I'll begin with general fund projections included in first quarter. So the top box includes the beginning cash balance, projected revenue, expenses, and other financing uses. These are subsidies paid out of the general fund, followed by the ending cash balance for each year. The bottom box, I just chose to add a bottom box there. That box summarizes the deficits that were projected at first quarter for each year. As you can see, the deficits were projected each year, and the ending cash balance also declined. Same number, the deficit caused the cash balance to decline.
Yes.
Hi, Walter. Just a quick question. On that screen from previous chart, which is exactly the same, the term that was used, balance to expenditure, when we look at the ending balance for 2021, we have 171, then 129, then 97.62, and it goes all the way down to 28 million. And that balance to expenditure at that point was 5.6%. So I know at one time when I first saw that after the first quarter, that seemed pretty disturbing that we were going from a 2021 of a 31.6 down to 24, 19, 12%, and then finally a 5.6%. So that's where I guess you're going to show us
Yes.
that those numbers have changed.
Yes,
Okay.
absolutely.
Just
Yeah,
wanted
and we're, just to point out, we're using the format now with the cash reserve requirement that's calculated according to the new ordinance that was issued. So we're not showing the percentages, we're actually showing the dollar value that's required to have on reserve each year.
Okay.
It's 25% of operating expenditures with some exceptions. Depends on where we are with capital.
So in that cash reserve requirement of 125 million, and we have 28 million, that's the difference between the two.
Yeah,
Okay.
that's a problem.
Thanks.
So I'll move on to the next slide. Okay, so this slide is a preliminary version of the second quarter report. It includes adjustments to revenue and subsidies. Just about every category of projected revenue is improved. The most significant are in property taxes, other taxes, which are really bed taxes, and sales taxes. Property taxes are expected to increase starting in 2022 by approximately 17% due to the triennial reappraisal. Bed taxes are expected to increase over the next several years to pre-pandemic levels. We have a 25% increase in 2022, followed by another 25% in 23 and a 10% in 24. Sales taxes continue to improve each month. I think during my time here, July was the greatest number that I've ever seen in the year and a half that I've been in this office. This year, we're on track to end at $275 million. It's a 15% improvement over the budget, this is also on track to right back to pre-pandemic levels. Sales taxes for years 2022 through 2025 include a 2% increase each year, but also include a projected annual decrease of about $4.5 million each year for the recent sales tax exemption for employment services. So the Cuyahoga County's cut of that is about $4.5 million on an annual basis. Subsidies increase in 2021 by approximately $15 million for the capital projects approved by council. These projects included the ERP at about $600,000, the consultant for the new corrections center of $4 million, the juvenile court security system at $5.6 million, and the work at the old juvenile court building to secure the building and also to abate the asbestos. That was about $6.8 million. In 2023, the gateway debt is retired, saving approximately $5 million annually. And in 2024, the hotel operating account will resume paying the hotel debt service, saving approximately $10 million each year thereafter. Notice the bottom box, the projected operating deficit is reduced significantly from first quarter, and the projected ending cash balance is in excess of the cash reserve requirement each year.
May I ask a question at this point?
Yes, you may.
Okay. In the first quarter revenue for 2022,
Yep.
we had a projection of 171 million carried over, and this carryover is less than that.
That's the 171, that's the cash balance. Councilwoman Baker, if I can go on to the
Okay,
next
maybe
slide.
that'll help.
Yeah, the third slide takes
Into account.
the two previous slides and squeezes out all the differences, so you can see truly where the increases and the decreases are.
That would be helpful. Thanks.
So I call it an adjustment slide. As I referenced earlier, this calculates the net change from second quarter to first quarter for each category of revenue, expense, subsidy, and cash. Again, the bottom box calculates the net change to the overall deficit, so you can see that the deficit went down. Let me just go through the assumptions here. On the revenue side, property taxes increased by 17.6% from 2021 due to the triennial reappraisal. License and permits decreased slightly based on the annual average. Fines and forfeitures increased 5% each year. Charges for services increased just slightly. Intergovernmental increases in 2021 due to the public defender reconciliation and going to 100% reimbursement from the state starting in July of 2022. The outgoing years, there's a reduction in 22 to 25, and it's due to the reconciliation. It was included in the first quarter projection and carried out too far. The other revenue decreases each year to the handling of the $5.5 million repayment from the CAVs, now going to the trustee rather than coming to us. According to the indenture, the payment from the CAV should have been going to Huntington, the trustee, rather than to us, and then still pass through back to us through the sales tax distribution, and that's not what was happening. Other taxes increased. The other taxes increase are in bed tax collection. When I say other taxes, that's primarily bed taxes in that category. Bed taxes are expected to increase over the next several years, 25%, 22, 20%, 23, 10% in 2024. Sales tax increase based on the annual average. Future years are increased 2%, but also decreased by the sales tax exemption for employment services. There's really no change to expenditures. We haven't finished that portion of the review yet, so we're not expecting too much change there. It should be relatively flat, but we'll wait and see what those numbers reflect. The other financing uses, again, those are subsidies that the general fund pays. So in 2021, subsidies increased by approximately $15 million for the capital projects mentioned earlier. In 2023, subsidies decreased by about $5 million each year due to the retirement of the gateway debt. 2024, subsidies decreased by $10 million when the operating account over at the hotel resumes paying for the debt service. The box summarizes the adjustments. Total operating revenue increases by approximately $13 million in 21, $26 million in 2022, $18 million in 2023 and 24, and $20 million in 2025. Other financing uses or subsidies increased by $15 million in 2021, decreased by $3 million in 2022, $5 million in 2023, and $16 million in 2024 and 25 respectively.
Mr. Chair,
Yes.
I just wanted a point of clarification on the other taxes for 24 and 25.
Yes.
You indicated that they were majority bed taxes. Just wondering, can you explain the decrease in 24 and 25? If I missed that, I apologize.
No, it's in 24 and 25, Councilwoman Brown. 24 and 25, we get back to our normal 2%, which should be about $9 million. So we get back to the normal value that the bed taxes bring to the county.
Thank you.
Certainly.
So, Director,
Yes.
in the category of other revenue,
Yes.
why does it decrease in every year except for 2022, in which it increases by $4.5 million?
In 2022, we have a scheduled repayment from the levy back to the general fund of the $10 million. In 2019, the general fund subsidized the levy by $15 million. We have $5 million scheduled to repay this year and $10 million for next year.
Okay, thank you. Yes.
Just trying to understand the ending balance under 2021 current projection, we're in the negative 1.3 million.
Yes.
And then as we carry on to 22, we start gaining and go in the black 27, 51, then 85, then finally 121. How, I guess I haven't looked at these numbers that hard, but how do we advance so quickly?
Councilwoman Baker, this slide is just showing the differences from first quarter to the second quarter. So the true cash balance would be on the previous slide. So, for example, in 2021, we end the year at about 169 million, and you see it picks back up right again with the beginning balance at 169. We end at 157 because 2022 still has a projected deficit.
So in 2025, where we end in 28,
Yes.
we are now ending in,
We're ending at about $150 million.
wow, and I guess that's my.
Yeah. Yeah, I just want to be clear that the adjustment slide just squeezes out that it's taking second quarter and subtracting first quarter, and that's the difference. I thought it was important just to show by category the net increase or the net decrease.
Okay, I gotta look at it a little harder.
Oh, certainly. So 2022 and 23 have projected deficits, as you can see, of 12 million and 9 million respectively, which we intend to balance through the 2022-23 biennial budget process. We've always submitted balanced budgets to council, and we'll submit a balanced budget for the 2022-23 biennium. I can answer additional questions on the general fund, or if you'd prefer, I'll move on to the levy fund.
I'll ask my colleagues if anyone has additional questions on the general fund. Okay, if
To
anybody,
wrap, just one more, just to wrap, the cash reserve requirement, that's blank. That's not filled in because this is just a differences slide, or?
Yeah, it's a different slide. I didn't think it would make sense to do that. It
You-
wouldn't be telling of a true number.
All right, thank you.
You're welcome.
okay, and if anybody,
Yeah, Mr. Chairman,
Yes.
if I may, as it relates to the cash reserve, passing the new legislation, it would be kind of difficult to predict because isn't that based on the previous year?
Yes, it is. So what I've basically done, in the future years, I've taken prior year's expenditures at 25%, and put in an estimate.
Thank you.
You're welcome.
so if anybody comes up with additional questions on the general fund, they can be asked at the end of the next round. So we'll have the director move on to the HHS levy.
Okay, so HHS levy, this slide is the Health and Human Services levy fund projection included in the first quarter report, so we're going to follow the same format that we just did. The top box includes, again, the beginning cash balance, the projected revenue and subsidies, followed by the ending cash balance. The bottom box, I did it for my own benefit. I hope it helps everyone here as well. The bottom box summarizes the surpluses projected each year, in this case, based on first quarter projections. The projected surplus in the Health and Human Services levy fund grows by approximately $20 million, as does the ending cash balance. The next slide, this is a preliminary version of the second quarter report and includes adjustments to revenue and subsidies. The property tax estimate increases slightly, as does intergovernmental revenue for the homestead exemption credit. The reductions of charges for services and other revenue resulted when we moved the Health and Human Services departmental operating accounts out of the levy. They should have never been set up there. These departmental operating accounts should have never been established in the levy fund. The subsidies are expected to increase starting in 2022, but not beyond budgeted levels. The second quarter subsidy projection includes a $4 million increase in 2021, $18 million in 2022, $17 million in 2023, $16 million in 24, and $16 million in 2025. So again, we haven't completed our second quarter review of departmental expenditures, so those lines are, they're not even represented here because those show up as being actually subsidies. So I'll provide some more detail on the subsidies when I present the second quarter report, but notice the bottom box, we've got smaller projected operating surpluses each year, but the projecting ended cash balance is well above the cash reserve requirement for each year. And then the next slide is also, again, the adjustment slide. So this slide calculates the net change from second quarter to first quarter for each category. Again, the bottom box calculates the net change to the overall surplus. The 4.7 and 4.8 mils levies are fixed, so the revenue doesn't change. Subsidy spending is expected to increase in years 2022 through 2025, but again, not beyond budgeted levels. Questions about the levy fund?
So Director, could you return to the middle slide, please? My question,
First quarter or second quarter, Councilman Miller? Or is it the adjustments?
It's actually the same on both the first and second quarter. The question is why the property tax is estimated at a little under 268 million for 2021, but around 259.5 for 2022 through 25.
Yes, Councilman, Miller, that is due to the homestead exemption credit from last year posting this year.
Okay. So, you projected higher revenues in the general fund on property tax because of the triennial reappraisal,
Correct.
but you did not on the Health and Human Services levy, and I presume that's due to the effects of House Bill 920.
Yes, I believe it. There's no impact to the levy funds.
So the levy fund stays constant, but the general fund property tax will get a benefit from the higher appraisals.
That is correct.
Okay, thank you. Questions by my colleagues? Okay. Any questions about any of the presentation?
Do you have one, if you don't mind? If I can go
Yes,
back to
please.
the operating levy,
The
general fund, I'm sorry.
general fund, okay, fine.
Just, and I understand why, but just so it's noted, the operating expenses for the second quarter are exactly the same as the first quarter.
Yes.
So, given that increases are in revenue, would you anticipate, especially from what we're hearing in different committees and budget asks, that things are higher? Employment is higher, labor is higher, everything seems to be more. So can you give us any kind of anticipation of how much you think those expenditures are going to increase?
The initial numbers that I saw just recently is, as late as just Friday afternoon were that they were relatively flat. The projection was going to be relatively flat. Because I think the first quarter was put together well in documenting vacancies and things that we knew were forthcoming. So I'm not predicting that the operating expenses are going to increase drastically.
That's good to hear. There'll be, though, a percentage increase just because of inflation and
Yeah,
cost of living.
sure,
and-
sure. No, I would agree with that.
Okay, but nothing substantial that you think that's going
No.
to? Okay, good. It's good to hear. We'll find out when,
Yeah, it'll be
So-
another 2 weeks. I think we're done with the report, and I know you'll be on recess, but I'll still send the report.
great, thank you.
We'll certainly circulate the report to everybody, and if there's questions, we can circulate questions around, and so we will definitely have a refinement, especially on the operating side, but this is very useful information to.
Thank you.
It suggests that we have a manageable financial situation at this point on both the general fund and the levy, and so we'll continue to monitor it and prepare for the budget process. But it's a big improvement over what we had projected in the first quarter. Okay. Okay, seeing nothing else, thank you very much, Director. We really appreciate your cooperation in putting this together for us.
Very welcome, Councilman Miller.
So I'm now going to ask my colleagues if anybody has any miscellaneous business. Hearing none, is there a motion to adjourn? Is there a second? All those in favor say aye. Aye. Opposed, no. We are adjourned. Thank you very much.